Hi, welcome everybody. This is Carl Holman. I am Communications Manager here at A&D Mortgage. Welcome to our weekly Tuesday webinar at 1 o'clock. Today we're going to be going through the ins and outs of correspondent lending, whether you want to go Mini-Corr or go full. We'll go through the ground rules here for our webinar. All the microphones have been muted, and we're going to ask you if you've got questions to put them in the Q&A function on your Zoom panel. We'll do the questions after we get through the formal part of our presentation. So let me go ahead and start by introducing our two speakers. Hannah Roslick and Billy Abrams. Hannah is our Correspondent Business Development Manager, and Billy is the President and CEO of ADM Securities. He's going to take a couple minutes here to introduce you folks to A&D Mortgage if you're not familiar with us, and then Hannah will go sort of more in a deep dive on correspondent lending and how you guys can work with us on that. So with that, I will turn it over to Mr. Abrams. The floor is yours.
Thank you very much, Carl. So I'm Billy Abrams, as Carl just introduced. I am the CEO and President of ADM Securities, which is part of the family that A&D Mortgage, or branded as A&D Mortgage, is in. A&D Mortgage is a family of companies under common ownership that include the mortgage company, Imperial Funds, and ADM Securities. This sort of a structure is designed to give A&D Mortgage every tool available to find the correct solution to any mortgage-related transaction. The company was established in 2005. It's based in sunny South Florida. A&D Mortgage is a full-service direct servicer and lender of conventional, government, and non-QM loans. One of the nation's premier non-QM lenders. AD's rapid growth is reflected in the fact that we have provided the collateral for now 8 non-QM securitizations totaling $2.5 to $3 billion. This all just since October of 2020. The growth and the success has fueled strong relationships with multiple warehouse lenders, along with investors. That, along with our strategic alliance with Imperial Funds, provides us with multiple exit strategies for all of our originations. This empowers us to act as though we're an aggregator without actually being the one doing the aggregating. And it puts us in a very strong position with regards to the rest of the industry that's involved in non-QM lending. So what this is about is to show you how to hope to bring you in and make you a part of this exciting team that A&D Mortgage has built and continues to build. I see up on the screen is a map that shows the licensing of A&D Mortgage across the country, and a little bit of an explanation here is in order. A&D Mortgage is fully licensed in 26 states, and they're licensed for business purpose only loans in 21 more. The bright red states you see there are the ones we're fully licensed in. The pink ones, I'll call it pink, are the ones we are licensed for business purpose loans only. And that requires a little bit of an explanation, and that is business purpose loans only are mortgages on, it can be mortgages on single family residences, but investors loans, so investment purpose loans, which obviously is a large part of the non-QM product suite. There's only 7 states that show kind of gray on this map: North Dakota, South Dakota, Minnesota, Nevada, Vermont, and Hawaii and Alaska, where we are not licensed to do business. And there's one that's not a state at the bottom there, bottom right, that's Puerto Rico, where we are licensed. Now, what's important to understand is that for fully delegated correspondent partners, this map really is not relevant. Fully delegated correspondent partners do their own underwriting, they fund the loan, and then they sell the loan to us. So the only map they need to be concerned about is their own in terms of where they're licensed. When we get to the mini correspondents or non-delegated correspondent lenders, that's a different story. They do have to be aware of this map, and that's something that I guess Hannah will get further into. So let's turn this over to her and see what we can learn.
Thank you, Billy. So guys, I'm gonna start with just the fact about, saying about the A&D, we've been in the business for quite some time. Specifically with correspondent business, we started 2 years ago, and we started working in 3 main directions that I'm going to go over in the details right now. So our correspondent channel have mini correspondent section, non-delegated section, and full delegated. So I'm going to start with my first slide with the difference between broker channel and mini correspondent channel. So when you are, as a company, trying to grow, and you're right now located at that step where you're brokering loans out to the lender, but you're trying to expand your operations team, you're trying to expand your business, your next step will be mini correspondent partner. That's pretty much white labeling for our partners, where we're still going to be responsible for all the operation side, including disclosure, underwriting, closing process, and partially funding. I'm going to get back to this part. But all the loan documentation on the files will be reflecting your company's name as a lender. So this is a very good point to start for small companies. That way they can advertise as a lender, but still they don't need to hire all the operations and have all that responsibility that lender usually have, since still all the work will be done by A&D Mortgage, by us. So second benefit of moving from broker to mini correspondent channel is the compensation, because besides the borrower paid compensation, you can charge also lender paid compensation that will not be disclosed on the disclosures, on GFE or final closing documents. That's specifically the points that will be paying you as an investor to the lender, since your name will be reflected as a lender on loan documentation. So you can charge up to 3% as borrower paid and up to 2% as lender paid on compensation, or you still can choose, obviously, to charge either borrower paid or lender paid or both. It's up to you, so that's also a great option. Another benefit is, as mini correspondent lender, you'll be able to choose and be in charge of your appraisal process, because you'll be able to work with appraisal management companies directly, and you'll be able to reach out to your AMC and appraisal, request all the revision to stay on top of the timing, turn times directly as well, which is a big plus to a lot of brokers out there. So the one thing I want to mention that I would recommend for the company to transition from broker to mini correspondent channel, if you really have that plan to grow, because I know there are a lot of people out there that are happy brokering out loans and they have really good business. So if you're planning eventually to go big, to go to correspondent channel, eventually to become correspondent lender yourself, it makes sense to move to mini correspondent lender. Regarding funding, as I mentioned, all the disclosing, underwriting, closing is still done by A&D Mortgage, even though your name will be reflected on the documentation. Regarding the funding, we'll be able to table fund for you still investment transactions in all states except California. All the owner-occupied transactions, which includes primary and second homes, will need to be funded by your money. In this case, you'll be able to get an approval with some warehouse line, or we have some companies who have pretty good net worth money, so they use those assets to fund loans, and we usually send you fund your loan within 2-3 days, so you don't need to hold it for a long time. So that's another point to think about if you're trying to make a transition from the broker to mini correspondent. So next slide, please, Carl, that I want to talk about. Next step in the correspondent business will be delegated and non-delegated channels. So what is the main difference? So this is a channel already meant for big companies out there who have some mortgage operations, who have compliance team, who have disclosures team, who have closing team. The only difference will be in the underwriting. We can underwrite for you, which is going to be non-delegated underwriting, or you can you can have your underwriting team who will be underwriting files for you. In this case, you're going to be signed up with us as a full delegated partner. So what are the benefits of becoming correspondent delegated or non-delegated partner with us? I mean, number one, you're becoming a lender. So you're in charge of the process. In the first place, you're in charge of your pricing. So you'll be able to build in that lender compensation across all programs, all products. If you have any retail business, especially branches, that's definitely a channel for you. You'll be able to set up the pricing the way you like it and cover all your expenses and have your own non-QM product, and you can market as your own non-QM product out there. Also, you'll be in charge of your operations, meaning you don't need to wait for someone else turn times. You'll be able to disclose files, to close them as quick as your company, your loan officer needs. You can have that hand on your operations. So also a lot of investors, including us, we offer volume incentives. So if you grow a business with a correspondent partner, you learn the guidelines, you learn the process, obviously, and eventually your business, your volume grows. So, if you have good partnership with your correspondent investor, you also can have some volume incentives, and you'll be getting additional pricing adjustments based on volume you'll be sending to us, which is as well a big plus out there. And something that I want to mention, we are final investors, so we don't resell our loans anywhere. As Billy mentioned, we already closed 9 securitizations, so we are final lenders, and the pricing you get is already final pricing that is the best out there. So a couple things I want to mention while I'm at this slide is the difference between delegated and non-delegated underwriting. So obviously you need to choose which way to go based on the operations you have. If you have underwriting team on staff, obviously it's better to be a full delegated underwriter. To be full delegated lender to underwrite the files yourself. That way you have full operations done at your company, and you can control all the process. But also the good option, non-delegated underwriting, especially with non-QM loans, because I know there are a lot of lenders out there who are not feeling that comfortable with non-QM products since there is no AUSs on conventional files. So they want to kind of move that risk to someone else, which we very gladly will take, and we will underwrite the file for you. So that way you guys don't be worried, if my file will get cleared in post-closing, if everything gonna go smoothly. So also I noticed, with latest real estate market, when the conventional pricing was really good, most of underwriters, most of our correspondent partners, they really didn't have enough of underwriters to also underwrite non-QM loans because they were too busy. There was a lot of conventional files. So even though they had underwriting team, they would send files to us for non-delegated underwriting just because they didn't have enough of underwriters. So they didn't want to hire additional underwriters. So that's also a great option. If you have a limited capacity, you don't want to take on additional expenses because you're not sure what's the volume going to be in the next couple months, you can always start with non-delegated underwriting option, which is great as well. So on the next slide, I'm going to go over regarding the benefits of working with A&D Correspondent. I mean, number one, that we are securitizing the files. We are final investors. So all the guidelines and all the products that we offer there, those are our own products and the guidelines that we've been working for the last 6 years. So all of our team is very seasoned and everyone is familiar with the products that we offer. We also have a credit committee in-house. So if you have any scenario that does not match our guidelines, you can submit an exception request before, once you have some scenario, to see if it's going to work, which is a great option, and you're going to receive an answer in the 24 hours. You don't need to wait for any third parties because everything done in-house. Our guidelines are pretty clear, and underwriter will always ask you, specifically the questions, and will require documentation specifically that are listed in the guidelines, nothing else. No re-underwriting in post-closing or anything like that. Also, another thing is we offer, besides non-QM product, our non-QM products is bread and butter for A&D, but we also have other products, which is Fannie Freddie and FHA and Prime Jumbo, which is also beneficial because I know sometimes it gets complicated for some companies to work with couple correspondent partners, because now operations team needs to learn and needs how to use each of the system that is out there. So with us, you can, your operations team as a processors, post-closers, closers, they can get used to working with one LOS, with one process, with specific turn times, which is great, and because we offer all the products out there. We do have as well dedicated correspondent team who works only on correspondent files. If you choose to underwrite with us, we have correspondent underwriting team who will be working specifically on those files. We have collateral team as well who's working on the purchases. And as well, the most important part, we have our pre-purchase team that is in-house, which most of the companies out there don't have. And they have very quick turnaround times. Once you upload the closing package to our system, to our portal, usually within 24, 48 hours, they will post conditions if there are any. From my experience, 99% of our files comes back without the conditions if we underwrite the file. If there are some files that are coming back with the conditions, usually they are regards to missing disclosure or missing something from the closing package. So, which says a lot, that our underwriting team as well has been seasoned for a while, so they really have clean approvals, and they deliver good conditions out there. So with this pre-purchase review within 24, 48 hours, if the file is clear, our collateral team can purchase the loans from you as well within 24, 48 hours, which is really good compared to all the other lenders that are out there. We'll be able to take off this loan from your warehouse line really quick. I know some of the lenders, especially that are starting just in correspondent space, sometimes they have this issue with liquidity when they don't have a huge amount of warehouse lines or assets to be used specifically for non-QM files. So that's a big benefit, especially for people who are starting up in correspondent space, to sign up with us, because we're definitely trying to purchase those loans really quick for you, and usually it does happen within a couple days. And the last 2 points on the slide, if you guys will be looking into signing up with us, our minimum net worth requirement for non-delegated is only $250,000, and for full delegated, $1 million. So it's also not as big as I saw, some lenders require in the market. So we are very open for all the companies that just making their first steps in the correspondent space to sign up with us and be our partner.
Thanks, Hannah. And with that, let's go ahead and we can open the Q&A session. So if you guys, again, if you've got questions, go ahead and type them into the Q&A portion. I see one that can get us started off with, Hannah, which is, can one company be approved for wholesale and correspondent channels?
Yes, if you guys are signed up with us currently as a broker, You can definitely keep your broker account open. And you can also sign up for non-delegated or full delegated channel. You cannot sign up for Mini-Correspondent because essentially Mini-Correspondent is white labeling to wholesale, as I mentioned. So, but you definitely can sign up for wholesale and non-delegated or full delegated channel at the same time.
Okay. We've got one here. Is pricing more competitive compared to brokers? To broker charged?
So Mini-Correspondent pricing is the same one as on wholesale, obviously, since we are still doing all the work. But if you're going to choose non-delegated and full delegated pricing, the pricing definitely more competitive since you guys going to be doing a big chunk of the operations responsibilities. So there is definitely a pricing incentive.
Okay. All right. Another question. Who services the loans after they're purchased?
So we are final investor and we actually service all of our loans ourselves. We do not send them to subcontractors or anyone else. All loans stay with A&D Mortgage.
Okay. For the 250,000 minimum net worth for non-delegated, what does that consist of in figuring the net worth?
I mean, we'll be looking at your financials that you're going to provide to us at all your assets. So we'll be going based off that number.
Okay. What are the fees that get charged for non-delegated?
So fees, we have two of them. We have $495 underwriting fee if we're going to be underwriting, and we also have a delivery fee, which is $595. So it's around 1,100 or so.
Okay. If we underwrite the loan, is there any chance of a buyback to the broker after the closing?
So there is a chance, meaning we have this option. Once you guys going to be completing MLPA, there is a definitely scenario with the buybacks. But I'm going to tell you, in the last 2 years that we didn't have any buybacks at all because with underwriting non-QM loans, there is such thing as an exception. So if there is some scenario, I know underwriters are also people as us, so they can make mistakes or errors. Some items can be missed in the process. If there is underwriting error, it can be covered with an exception. We're gonna just lose some money in pricing, but we still will be able to purchase loans from you back. The only scenario I can think of the buyback, if we're gonna have a trade loan, so any loan for primary or secondary home occupancy, and if we're gonna have any trade error that you guys will not be able to fix, since in case with non-delegated or full delegated channel, you'll be issuing disclosures and closing, that loan can be suspended for the buyback. But again, I didn't have any of our partners, correspondent, doing that mistake because mostly all the processes with disclosure packages and closings are very automatic. So we didn't have any errors so far, thanks God.
Okay. Can we sell TPO loans non-delegated?
Yes, you can sell TPO loans non-delegated, but we need to see your TPO policy in order to approve you guys for that. And also we need to get an approval from your warehouse line that they actually allow for you guys to fund TPO loans and then resell them to correspondent lenders.
Okay, and you had mentioned pricing, so a question came in about where can they find the pricing for the correspondent channel?
So we have our pricing available in Optimal Blue, and also we have our pricing available in LoanNext, as well. We do have, Billy and I have a copy of the rate sheets as well. If you guys can send us an email, we can also send you just a quick review of the rate sheets. But in general, the main process is to review pricing in Optimal Blue or Loan Next.
Okay. Hannah, can you check your microphone? Your audio is down just a little bit.
Okay, I move back. Is it good? Hello?
Yeah, that's a little better. Okay. All right. So there's another question for BPL loans only. I'm a real estate broker. I want to know if Mini-Correspondent is available for us.
I mean, in order, you can definitely give me a call after the call so I can understand where you guys stand in terms of operations, and if you guys have warehouse line, which kind of loans you're doing. Are you doing only investment transactions? Do you have warehouse line or assets to fund owner-occupied secondary teams? So after a call, or please feel free to give me a call and we can discuss if your company.
Yeah, they're apparently closing with us as a broker, but he's interested in only the BPL.
Okay.
So I'll send you his contact information after this, and you guys can do a follow-up call.
Okay.
Okay. And then what's the difference in approval process between full and non-delegated?
So the difference, actually, the requirements are identical. The only one thing, if you guys going to underwrite the files, we're gonna ask you to provide a copy of resume of your underwriting team or your underwriting manager to make sure the person has, enough of experience to review those loans. Because obviously our goal as well to purchase loans for you guys to make money, for us to make money, so we don't want to have any buybacks. So in this case, just underwriting resumes to make sure the person has an experience, and you're going to be good to go.
Okay. All right. That's all the questions so far that have come in. We'll give it a couple more minutes if there's any more questions. Otherwise, I'll let you guys keep going through questions. I'll go through the wrap-up section really quick. Do we assist in setting up the warehouse lines?
So I can send a list. We have a list of warehouse lines that work with us, who we approved with as a takeout investor, that I can share with you. But mostly, I believe at the time of the approval process, they need your financial and other documentation. They don't really need any other documents. So all I can do here is I can just provide you a list with the contact information of people who you can reach out for the line, and let me know if I can help with anything else there.
Okay. All right. And you guys will be getting an email tomorrow that will have that'll have Hannah's contact information in it. So you'll be able to follow up with her with any other additional questions, but I'll refer the two people who've asked for specific information over to her just after this webinar is over. So let me go through the wrap-up section really quick while other people type other questions in. So first off, our correspondent website, the web address for that is corr.admortgage.com. And that's where you can find pretty much everything that we've covered here. All right, and then I'll answer the next question in just a second. So we have a few technology tools these are mainly on the broker side for the wholesale side, in case some of you are already wholesale brokers. We do have a quick pricer for our non-QM loans, so you can go over there and see that. We do have a centralized appraisal management center. I think we've got close to 24 approved AMCs, but you can manage all of the AMC requests through the one platform. And then we have A&D Studio, which is sort of a centralized online marketing design suite, similar to Canva if you've used something like that in your shops. Okay, the number one question that I've gotten, we'll get to in a second. So every week we do a webinar at 1 o'clock on varying topics. So over the next couple of weeks, we'll be doing some product related ones. Next week, we'll cover investment DSCR loans. The next week, we'll cover our 12 and 24 month bank statement programs. The day after Memorial Day, we'll cover P&Ls. And then at the beginning of June, we'll do a deeper dive into bridge loans. And so I've gotten this question a couple times, pretty much every webinar consistently, which is whether we send the presentation out or if it's being recorded. And the answer is yes, we record them. At the moment, we're not sending out the PowerPoints, but I am trying to get some approval from our compliance team to allow that. But we do record these and they will be posted on our learning center, which is admortgage.com/learning-center. All of our prior webinars are there as well. Depending on how quickly I get the recording back from the editors, it'll either be up before the end of business today, East Coast time, or it'll be pretty close to first thing in the morning tomorrow. You'll also get in that same follow-up email that I'll have Hannah's information. There'll be a link that will take you to the recording as well. That one's it'll be hosted through Zoom and not on the Learning Center, but you'll have multiple options on where you'll be able to view this and all prior recordings. You can also stay engaged with us on social media. We're pretty much on all the major platforms: Facebook, Instagram, YouTube, LinkedIn. We also have kind of a news bot channel on a platform called Telegram, which is similar to WhatsApp, but you can download Telegram from Google Play and the App Store. And then we're participants into exchange groups called non-QM Exchange. One's on LinkedIn and one's on Facebook. So it's a good place for you to network with us and other folks in the non-QM community. Maybe not as relevant on the correspondent side. But again, if you're involved in the business and you're doing non-QM, you can stay engaged with us that way. So we still don't have any additional question. Oh, we do have one more question. Do they need to be audited or unaudited financials?
It's audited financials. Yeah.
Okay, great. So when we close out the webinar, there'll be a brief 5-question survey that I'd like you guys, if you wouldn't mind, to give us some feedback on the information, any additional topics you guys would like to see us cover in future webinars, and just kind of an overall rating of how we did. So if we'll give it another minute, if there's no other questions, we'll go ahead and wrap up. So let's give it 30 seconds more. Nope, just thanks. Great. Good feedback. Thank you, Luis. We'll get back in touch with you again on that realtor question you had. Okay, well, that seems to cover us for the day. So let me go ahead and thank both Hannah and Billy for their time today. It's been a lot of good information, and we look forward to seeing you at other upcoming webinars in the future. So just remember, we're here every Tuesday at 1 o'clock. So hope you guys have a good rest of your day. And we are done.
Thank you, guys.
Thank you, Carl. Thank you, everybody.
Bye, everybody.